Another episode, another video. I have a special guest today on the Right at Home Long Beach channel, YouTube channel. As you know, I'm starting to bring in a little bit more experts that I work with in the senior field typically. Um, and so today I have Dusty. Dusty, is it Lindinger? I always get it wrong.
Lininger, yes.
Lindinger. Okay. Dusty, and where are you based out of, Dusty?
I am based out of Fountain Valley / Huntington Beach, California.
Awesome. Okay. Okay. So Dusty, maybe we'll start with just tell the audience, tell the group who's Dusty? What do you do and how'd you get where you are?
So good question there, Kreisler. I actually had a document industry background. I was a road warrior. My wife actually had a contract loan processing company. For a few years, she said, "Hey, you're traveling a lot." We had a couple of kids. She said, "I
Yeah.
think you'd be a natural in communicating," which is probably the most important attribute when getting people to understand the complicated world of different types of loans out there. So I studied
Yeah.
up, not all licensed up, and now have been doing loans quite a few years. And my wife and I make a great team. I'm the originator. Go out, find the right loan, the right product, the right pricing, the right rates, gather
Uh-huh.
the information, and I turn that over to my wife, and her team process the loan.
Awesome. Appreciate that, Dusty. And never looked back, huh? Since you joined.
Have not have not looked back. I don't miss those airlines and those nights in hotels.
Got it. Got it. Awesome, Dusty. Well, thank you for joining and sharing your expertise with the group and the audience. Um, I know you got to go to a baseball game, right? You're an Angels fan. Is that right?
I'm one of those weird people. I grew up in Torrance, was a Dodger fan. We moved to Orange County, and my daughter's an Angel fan. So I literally trade off what Adam can wear.
Okay, right on, right on. Okay, all right, Dusty. So I get these questions a lot. Your expertise in the loans. As you know, with the senior population, there's everyone's always asking about, well, how do I access cash? Right, long-term care isn't exactly the cheapest thing.
Yes.
And so at a high level, we'll start with the first question. Really, I want to cover is at a high level, what exactly is a reverse mortgage, and who is it actually for, Dusty?
That is a great question, and I will answer that succinctly.
Okay.
A reverse mortgage is another way that you can access funds in your house. On a traditional mortgage, a forward mortgage, you live in that home, you make a payment, and your loan
Mhm.
balance goes down because part of that money you pay goes towards the principal, and a lot of it goes towards the interest. On a
Mm.
traditional 30-year loan, it takes 30 years before you own that house. On a
Yeah.
reverse mortgage, here's what's happening. Instead of making a payment, which you don't need to do because you're not making a payment, the interest actually goes up that you owe on your house. Now, here's the trade off. A lot of people are kind of between a rock and a hard place. They're the proverbial home rich, yet they don't
Yeah.
have a savings or bank account. And
Yes.
that's an ideal scenario when people say, I've got a house worth, let's say, $1 million. It's paid for. They have no mortgage. Well, you can't just run out if you're a senior and borrow against it. As crazy as it sounds, you need an income to qualify for a HELOC or to refinance or any of that.
Mm.
With the reverse mortgage, as long as you are 62 years old, and in some cases as low as 55, you will
Okay.
qualify to be able to pull out some assets from that $1 million value home you live in. And there are two simple programs. One program, you take a fixed amount out, and again,
Uh-huh.
you never pay it back. The people who borrow it, the homeowners, don't pay that back. So they get that money to spend, or you can get a 10-year payment, meaning it's like an annuity. Every month, they will actually give you a portion of the equity back that you've acquired over all those years. They'll write you a check, deposit in your bank every month for life. So that's the difference. A forward mortgage, you pay, your balance owed comes down. On a reverse mortgage, you don't make any payments. However,
Mm.
the balance will be going up each month on the interest.
Hence the reverse part, right?
Exactly.
It throws people off. I mean, it even throws me off, right? Because we're so used to the traditional mortgage,
Yes,
Dusty.
it does take it takes a while to grasp that concept that you can get a mortgage where you are
Yeah,
making no payments. The only difference is instead of making a payment and that balance owed going down, you don't make a payment. Hence, the balance goes up a little bit every month.
got it. Got it. Okay. Okay. No, I appreciate that clarity, Dusty. Um, so this is a very important tool, right? Particularly for seniors, to your point, you know. Uh, when does it actually not make sense to do a reverse mortgage?
Well, there are instances where it doesn't make sense. I'll give you a real world example.
Yeah.
I did a reverse mortgage for somebody about a year ago. He was extremely happy and said, "You got to go talk to my neighbor a few houses down. He's my age. We're buddies." I went and talked to that gentleman. We sat down at his kitchen. I started asking him a few questions to find out if it would work for him, what his needs are. It turns out this person that I was talking to was a retired engineer. He had worked for, I believe it was McDonnell Douglas, one of the local uh,
Mm,
aerospace companies out here. The
yeah.
gentleman retired. He had a very nice pension coming in every month, and he owned rental properties with a lot of income coming in. Older
Mm,
gentleman, those properties were owned. Simply stated, there would be no real logical reason to tap into the equity in your primary residence if you're a senior who is flush, has money coming in every month, and
hmm.
that there's just no reason to do that. So it's a niche product depending on what your financial situation or wishes are down the road. So to plainly answer that question, it really doesn't make sense if you've got a lot of money coming in, if you got savings accounts and investments where you're
Yeah.
living the life you want and your lifestyle, if you
Yeah.
don't need that money or want a bill to stop like a house payment,
Yeah.
if that's not your case, you do not need this product.
Got it. Okay. Okay. So that being said, what do you often see, Dusty, where most common reasons seniors need the
Well,
reverse
the
mortgage?
most common I see are people who have worked their whole life. They retire. If you don't work for a city, state, government entity, the
Hmm.
word pension is very foreign because most of your
Yeah.
business these days and people retiring, unless they worked at a city, state type of facility, union maybe, there are no pensions. So what happens is they find out they retire, they're living on a fixed income, usually Social
Hmm.
Security, and
Hmm.
what's happening with inflation and everything, a lot of these seniors are finding out that monthly payment they get for Social Security just doesn't go very far because even if your house is paid for, you have your property taxes, you have your utilities, you
Yeah.
have your basic needs, your food, vacations. So what I'm seeing is a lot of seniors that said, "Hey, we planned for retirement because we worked 30 plus years and we always thought Social Security would give us the lifestyle we needed. Now we're finding out what we get from
Mm,
that each month really is not allowing us to live the lifestyle we want. Yet we've got a house paid for, so at least we don't have a house payment, but we can't tap into any of that money."
got it.
So that's
Okay.
very common. Now if the question is, what is that money used for? Chrysler,
Yeah.
I see that scenario where it's literally used for their daily needs. I've had senior couples tell me, "Dusty, we're so happy because with this money we're getting a little bit from our house here, we're going to schedule regular vacations. We're going to actually go out and eat with some of our friends who are more fortunate and go out to dinner a couple of nights a week." So we
Mm,
get that. But also lately, what I've seen a lot of seniors doing is they're still planning for their future. And they go, "Dusty, I think there's two options. Down the road, I'm going to need somebody to come in and give me some sort of care. Might be a
hmm.
day a week, might advance to 2 days a week. and sometime maybe even 5 days a week or around the clock. So they realize they can go that route, or they go, the other option is I can go to an assisted living facility. Maybe they've
Hmm.
done some research and found out that assisted living facility, those are very expensive. The least costly is to age in place and maybe bring in care when you need. Well, a lot of these younger seniors are looking at that and go, where is that money going to come from 5, 10 years from now if I want to age
Yeah.
in place? And a lot of them have realized or been turned on to the potential of a reverse mortgage where they can start taking a draw for the rest of their life, banking that money. Hopefully, it grows with some interest, or they can take a lump sum, invest it, or they can
Mm.
actually do a combination. They can take a set amount and still get X amount, and they are literally saving that for in the times where they'll need care, whether it's a day, 2 days a week, or round the clock.
Right. Okay. That makes sense. So this all sounds good, Dusty. So is it too good to be true? What responsibilities does the homeowner still have though when they do a reverse mortgage?
Everybody wants to know what is the catch.
What's the
There
catch?
are a lot of rumors out there. Most of them are false, but I'll answer that question directly. What are the responsibilities? They're
Yeah.
pretty straightforward. You always own the house. You are still the homeowner. What you're required to do, obviously, is pay your taxes, okay,
Hmm.
your property taxes. They actually require that you keep your house maintained. In other words, you don't want to be that one house on the block that has grass 3 feet high and weeds. So they
Yeah.
say maintain the condition of your home, pay your property taxes. And the third one is you need to retain the home as your primary residence, meaning you need to, at least in theory, live there 6 months and 1 day every year, maintain it as your primary residence. The only other stipulation is if it's a husband and wife, one of those two needs to still be alive.
Right.
The reverse mortgage ends when the last surviving spouse is no longer alive. And
Got it.
in a
Okay.
nutshell, that those are all the stipulations when you have a reverse mortgage.
Perfect. Perfect. Okay. Okay. And then very common, right? If you're an adult child listening to this and you're worried about your parents, they're also thinking about taking a reverse mortgage. What should they be asking themselves or looking
Okay,
out for? Yeah.
so it's very common. I deal with a lot of children of elderly who are looking into a reverse mortgage.
Yeah.
And flat out, if they don't need one, I'll let them know their parents don't need one. But if the parents have indicated they are running short every month, their cash flow is in the negative, I
Yeah.
explain to the children the situation they're in and let them know, yes, they have options. Options are A, they can get a reverse mortgage if they're still paying on their house and have a mortgage, that literally they cease paying that anymore and frees up money that would have gone towards that mortgage. The other thing I've told children is, hey, a lot of parents, their options are down to a reverse mortgage or call on their children to help support them.
Mm.
And oftentimes I get a concern call from a child of an applicant. We run through that picture, and that child says, I got to be candid. I really don't want to have to support my mom and dad. We don't want them to move in with us. We're not ready to put them in a senior care facility.
Yeah.
And we're not in a position to loan them or give them money. So it sounds like this program is a pretty darn good program. But yeah, and the main thing is the children need to be aware. It's communication. They need to be aware if their parents will share that of what their financial situation is.
Got it. Okay. And then speaking of adult children, Dusty, I get this a lot myself too when I work with adult children and elderly uh, seniors or elderly couples. How does a reverse mortgage impact heirs or their adult children?
So it is like a regular, in that case, it's almost like a regular home when
Yeah.
the people who have that loan died. If you have a regular mortgage and
Yeah.
you pass away, the options for the heirs are you can sell that property, okay? And then the proceeds you get from the sale, well, the first thing is you'd need to pay off the loan that the parents had if they had a loan on a regular house, and they split the remaining money that is there. A reverse is no different. When the last remaining person on that loan passes away, the borrowers have 6 months. Most of the lenders out there are understanding and will actually extend that to a year. Within a
Mhm.
year, the heirs need to make that decision. Do we want to? Well, they have a third option as well. Do they say, "Hey, we want to sell this," which happens often when there's multiple siblings. If there's four, five, six, it's hard to split a house 6 ways. It's hard to get one to say they want it.
Yeah.
Oftentimes, they end up selling that house, paying off the loan, and they divide the proceeds according to the wishes of their parents who passed away. Another option is they can refinance that. They can take that loan. Maybe one or
Mhm.
two of the heirs say, "We want to make this house a rental." Maybe one of them wants to live in it. They obviously have the option to get that loan and refinance it into their name and get a new loan that they want if they want to keep the place. So they can keep it by
Mhm.
refinancing it, or they can sell it and pay off the amount owed and split the remaining according to the wishes of the heir of the people who had the reverse mortgage. One footnote that I
Yeah.
find Chrysler very interesting. I quite often get asked, what happens if our economy goes bad, or if we get into a war or some catastrophe where that house, for some reason, is actually worth less than the loan? We've not seen that because, as you're aware of, housing prices for the last however many years continue to go up. But they've thought of everything. If that goes up, the heirs have the option to just give the house back, or they can buy it for 5% below current market value. So they
Mm.
will, in other words, they will never be upside. They will never own an asset that is worth less than the loan on it. So the heirs are protected from that.
Protected.
Yeah, from that ever
Okay.
happening.
Okay. That makes
Really good
sense.
question. Yep.
And then, and Dusty, what's, the seniors are thinking about this, but I mean, this is why we're doing this, is educating people about this tool. What are the safeguards in place to protect people from being taken advantage of in
So
these loans?
that is a really good question. The first one there is on these loans, there is a little bit of mortgage insurance, and that ensures that the heirs will not be left with a asset worth less than the loan. But the big thing that is in place, because we are dealing with seniors, and some seniors are
Yes.
young, vibrant, very sharp, and I've had people in their 90s obtain these loans. So one of the things that is a requirement is counseling. The counseling can be in person or even over the phone. It's typically a 30, 45 minute, sometimes even an hour. And it is an independent third party licensed counselor that tells the potential borrowers everything they need to know about the loan, so that there is nothing that was left out. They can't ever say, "Well, I didn't hear about this. My broker didn't tell me this or that." It is
Hmm.
required counseling, and those counselors will tell them any of the good, the bad, the ugly, whatever they want to know, and they'll answer their questions as well.
Got it. And that counseling is required, right,
It
by
is
law?
required. That is correct.
Okay. So if anyone out there is taking a reverse mortgage and no one offers a counselor, no one reaches out.
That is a big red flag. It is not a
Okay.
true reverse mortgage through the
Okay.
government if they have not been told they need to take the counseling. In fact, they need to take that counseling before they sign any documents whatsoever.
Got it. Okay. So this is heavily regulated then, Dusty, by the government.
It's very regulated. In fact, I am not political and try not to get political, but I do share with people. I truly believe this is one of the best programs that our government has enacted specifically for seniors. Because without this program, there are seniors out there that cannot make ends meet and literally
Hmm.
are forced to sell their home because that's the only asset they have. Now
Yeah.
they have no home and cash, but then they're not making any income. They can't buy another house unless it's a smaller one and they buy it for cash, or in some instances, they go out and rent. So it is
Right.
a government program, regulated, and is a very, very good program for the right people in the right situation.
Got it. Okay. Uh, Thanks for that, Dusty. And my next question is, and I think you touched upon this, Dusty, already, but it has to be asked because I'm sure I get asked almost every day. I'm sure you get asked, is it a fact or a myth? The bank will take my home when I pass. Where did
That
that come from? What's,
that
yeah.
is a myth. It couldn't be further from the truth. It is a lien like any, it's a loan. So any regular loan, they have a claim, to get that money back. But
Yeah.
you still hold title. The people getting the loan are still the title holders of that. And yes, it is a myth. It's out there. It's no different than Bigfoot or Loch Ness. Everybody's heard about it, but it too is a myth. And a long time ago, these have been around 30 years, Chrysler.
Oh, wow.
When they first came out, there was an Achilles heel or two. And when it started, sometimes back in those days, it was typically the husband who went out and got the loan and did everything. A lot of times, the spouse was not put on that loan. In that particular situation, when that husband passes away, the note comes due. Well, back then, when they first started, there was a surviving spouse, the wife, typically, and
Hmm.
she had to either refinance or do something at that time. And if you're a senior not working, again, you won't qualify for a loan. So that was one of the early Achilles heels 30 plus years ago. Shortly after they realized what was going on, these loans, it became mandated when a husband and wife, if you have a spouse and you go for this loan, both
Hmm.
both have to be on the loan. So that if one passes away, there's no change. The surviving spouse may live in that home forever until they're no longer alive. So
Okay.
yeah, you
Thank you
all
for that. I'm pretty sure someone's watching this and they're waiting for this, right? We should have started with that question, maybe. I don't know.
I wish I had $1 for every time one of the potential customers said, just like you did, I hear the bank actually owns your home. Couldn't be
Yeah,
further from the truth.
got it. Thanks for that, Dusty. And then so this all sounds great. And I know, Dusty, you've worked with hundreds of customers. Can you give just someone watching, okay, can you walk us through a real life simple example you may have that where you help someone stay in the home longer using this tool? Like what?
Yeah, I've got actually an acquaintance that I've known for years,
Uh-huh.
and she came to me and said, "Hey, my siblings are worried about my parents. They are aging. At the same time, we've looked into the price to put them into a home where, they may need to be. And quite
Mm-hmm.
candidly, we could not afford that very long. They own their home outright. What would they qualify for? They lived in Anaheim Hills, nice area. They
Mm-hmm.
said, is it possible? Is there any way they can get money without leaving their home that they can earn some interest on? And we can start sending in home care and bring the care in the house, which is much more reasonably priced than moving two people into a care facility.
Mm-hmm.
So again, did a little analysis, got all their information. Their house was worth a lot of money. And bottom line, they were able to take out approximately 45% of the market value of that
Oh,
home
wow.
in
Yeah.
one fell swoop. There were four adult children. They helped them set that up, put that money in a low yield safe savings plan, and
Yes.
then arranged care as needed. I think they started with people coming in for 4 hours a day, twice a week. And they said if they kept up that pace, the money they took out, in theory, would outlive the average life of their parents.
Mm.
And even if they needed a little more often, they still had a cushion with that. They were very happy, mainly because one or two of the children knew nothing about this, and they just said, "Hey, we've got to put our parents, in a facility. We don't have the money to pay for the ongoing people in. We need to sell their house, put them in a facility, and the proceeds from the sale of their house will fund, wherever they're going to go to live." And fortunately, one of the adult children knew me and said there may be an alternate solution where they don't have to sell their
Yeah.
house, have access to funds to pay for themselves to continue to live and age in place. So that's common. I've done multiple loans for that scenario. That's just one that jumped in my head.
Right. Right. Yeah. No. And the reality is, and you know this, Dan, Steve, most seniors want to age in their home, right? It's the comfort of your home. Not only to your point, it's more economical. Um, the health benefits, everything, right? Yeah, it's comfortable.
It's their
It's
same routines. It's what they know.
yeah, yeah. Okay, and then so, Dusty, in closing, if someone's thinking about this, what will be your advice if someone is just curious but they're not ready to commit?
Yeah. Well,
Where should they start? Yeah.
there is so much information out there now with AI, with Google and everything. You can
Mm-hmm.
spend some time and try to navigate through those on your own. Or if you'd like some real simple answers, direct answers to the questions you ask, they could just call me up, and there is no fee for consultation, no fee for having a chat.
Right.
And the biggest thing they will get is if they let me know the scenario. Um, Very shortly during that call, I'll probably be able to let them know, hey, this sounds like it is a potential option for you, or hey, it's not the right fit, but this would be a fit. So simply put, just give me a call. I'm glad to talk to anybody.
Awesome. Awesome. Well, and as always, I'm gonna definitely put Dusty's contact information in the show notes, and we will promote this on social media. Dusty, really, really appreciate your time on a Friday, late Friday afternoon. I know you're always busy. Always appreciate your services in helping me as well. And yeah, you want to close with anything else, Dusty?
Kreisler, I'm just going to turn around and say you are a true professional. I love the fact you are helping people by putting valuable content out there for people, whether it's reverse mortgages, in-home care, whatever it is. Thank you for your dedication and especially focus on seniors. And appreciate you and really enjoyed our chat.
Appreciate it, Dusty. Thank you.
Talk to you soon. Have a great weekend.
You too.
Bye bye.